Hello, my YouTube friends, and happy Saturday. Today is September 28th, if I remember right. Forgive me. I hope everybody's doing well. I hope you had a great week. I hope your portfolios are hitting all time highs. Market seems super strong, which I'm thrilled about. Today, I'm going to talk a little bit about stock splits as well as dividends and kind of explain it a bit for everybody so they understand it better. So, stick around, should be interesting. I hope you enjoy it. Good morning. My name is Adam Kahn, and this is Investing with Adam K. Feel free to call me the Rational Investor. Feel free to call me a jerk, whatever you like. Before I forget, before I get into the dividends and before I get into the stock splits, if you haven't already, do me a favor, hit that subscribe button, smash the like button. Really appreciate it. I hate to put that as first thing because most people don't make it very long into the video, to be perfectly honest. So I want to get that out early because for those of you who've already hit the stop button too late, but for those of you still around, maybe it'd be cool if you helped out the channel. It really does help. So a stock split and or a dividend, we'll do one at a time. And if you stick around till later in the video, I'll still talk about some stocks I think are still really inexpensive and see some good opportunity. So I assume everybody knows what a stock split is as well as a reverse stock split, and I'll get into that first. So if you have 100 shares of a stock and it's trading $100 and the stock decides to do a 2-for-1 stock split, what you will end up having is 200 shares of a $50 stock. It is still the same exact investment. People tend to get overexcited about it, and I tend to get really concerned when the companies make stock splits. And if I were perfectly honest, I would rather own 10 shares of a company trading at $1,000 than 100 shares of it trading at 100. I think I did the math right. The reason I would rather that is the more expensive a stock, the less that the public tends to be comfortable investing in it. They think of a price of a stock as expensive or inexpensive based on the dollars that it's trading at, not the market cap and the PE ratio, which is really what they should be looking at. So I kind of like a stock like Booking.com that's trading, I think, around $4,000 a share, mainly because what that does is it gets the public out of the stock and it gives what I would consider a fair price. If it doesn't have the noise and the emotions of people trading it, and it's just the institutional investors that are doing their analysis of what they think the company is actually worth, I'm much more comfortable owning less number of shares of something like that than being concerned that I own at least 100 shares of something or that I want to get to 1,000 or whatever that number I've made up in my head that makes it impressive to me. It's much more important that I value the stock properly, see that there's potential for growth and that they're moving at the right pace and that I see value in where it's trading. And what I find is the more expensive the stock, the better the price is to be fair to the market value. I don't know if that makes sense. So, anyway, back to the whole point is so you end up having 200 shares at $50 versus the 100 shares at $100. Still the same exact $10,000 valuation in total. So the reason that I don't personally love stock splits is, at least in my trading history, and again, this is just me. You need to do your own research. This is not financial advice. You need to decide what works for you. This is just what I've noticed from the stocks that I've had over the years, that when the stock split is announced, it's almost like an indication that the highs were set in. I know that sounds silly, and I'm sure if I looked through all the data of all the companies, it's probably just random. But what's happened for me is, let's talk about McDonald's, which I've talked about before because I've had it over 40 years. They've had 3 stock splits in the time frame, and my memory is, and I didn't look at it, so maybe my memory is incorrect as well. After their stock split, the stock would typically fall in half before recovering and reversing and going the other way. Now, over those 40 years, it's done incredibly well. So who cares that it's fallen in half? But those of you who are looking at markets and paying attention a little bit closer and trade more often, what I have found is that's not uncommon. Even a company like Sara Lee that doesn't exist anymore, it was the same type of thing. The stock would run to $60. They would announce a split. Maybe it would go a little bit higher than that. It would split into the 30s. And then the next thing you knew, over the next year or two, it would drop down to $12 or $15 a share before it finally started to recover as it went back up to 60 something a share, and then it would announce a split again. While that all sounds great in a video, this was, those moves were over years. So after the split, it was extremely painful to have it for 4 or 5 years and watch it drop from $32 a share to 12, and before it went back up and recovered. And that was the same for McDonald's. It would get to like 70, $80, it would announce a split, and then it would fall to 20 or so after it went to the high 30s or maybe the 40s. And it was a really rough period before it recovered and went higher. Was my concern when Chipotle announced their split. I did see the same thing with both Google and Amazon when they did their split. I don't love splits. Everybody else seems to because they feel like they've doubled the shares. But double the shares is not double the investment. It just is a number of shares. And what really matters when you're investing in a company is the dollar amount you put in. If you put $20,000 into an investment, it's $20,000. It is not the dollar amount of the shares and how many shares you have. And then if the company is growing at a faster pace than the market expects, you're going to have better appreciation. And vice versa, if they're doing worse than the market expects, you're going to have worse appreciation. The same thing is true with dividends. And the real advantage to me about dividends is it takes the emotions out of trading. But don't lose sight, it is not free money. And I'll use easy numbers just because, well, it's easier for me and my math, well, it's decent. Sometimes whatever. Anyway, so if you have $100 stock that gives a $10 dividend, obviously I'm just making that up, that's not typical. But you'll end up having on the ex dividend date is a $90 stock that you're going to receive a $10 dividend. Now, I'll thank ex dividend investor for using this analogy, but think of yourself as having a pizza with 8 slices. You take one of those slices and put it on the side, you still have the same pizza. Now, if you eat that slice, obviously, or if you've used up the dividend, you have less in total. But if you just separate it and leave it on the side, it's still the same total thing. It hasn't changed outside of you've taken that slice to the side. That's what a dividend is. So, same thing. You have a $100 stock, it gives a $10 dividend. You now have a $90 stock and $10 in cash. The negative is you have some tax ramifications because you've received that payout, but you still kind of have the same thing. And then it's your choice. You can reinvest it or do whatever you like with those $10. And my point of it takes the emotion out of it is you get it when you get it, and they send it out on the payout date. When I've talked about this in the past, I've gotten people in the comments telling me where I'm wrong because the stock price and it goes this way, and I've noticed this when the dividend happens. What I'm telling you is that really is the truth. The stock will open at $90 a share. Where it goes from there is market fluctuations. It is not because there's something about that the dividends are real free money and the stock's just going to go up or whatever people think. The value of the company is the value of the company. And if they distribute some of their cash, the company is now worth less money because they've distributed those funds. If the stock happens to go up, that is a market fluctuation. Maybe that people are still bullish the stock and maybe it was undervalued. But it isn't because that people, you just get the dividend and it really doesn't matter and the stock goes up. Uh, the options are priced accordingly. Like it's very intricate as to how these systems work. And to be fair to the banks and the others, like they know what they're doing. Even with mortgages, it's very hard to explain to people that by the time the Fed actually cuts rates and it hits the news, the rates of the mortgages have already moved. And I find for the most part, they tend to go the opposite direction after the cut. Why is that? Well, because Chase and JP Morgan, well, that's the same company. I always do that. And Wells Fargo and all the others that actually do the servicing and the selling of the mortgage-backed security product, they're pretty in tune with what the Fed's going to do. And they price in what they expect for the next 6, 8, 10 cycles. They're not just pricing it and then racing to the door the minute the Fed makes the announcements. they're putting on these trades in anticipation for the announcement. So by the time it gets announced and it gets into the news and people start picking up the phone and calling the mortgage company or whoever saying, "Oh, I heard the Fed cut rates today." Well, odds are that the investors are getting out of those trades and they've probably overhedged, which pushes the market the opposite direction of what people think. It is very possible that on a $100 stock that pays a $10 dividend, that some people wake up the next morning, don't realize that they paid a dividend, see the stock at $90 and just think, "Oh, wow, what a bargain. It's down $10 today," and potentially buy the stock. But it really will offset the amount of money that they give in that dividend the day that they're supposed to, and the price will be accurate for the total value of the company. And then the trading day will be the trading day, and the market and the stock will move accordingly based on fluctuations. Now, don't hear me wrong because I see real value in dividends. My original comment about the emotions to it is super important because myself included. If you want to ask what's the advantage of a dividend stock or a non dividend stock, generally companies go to paying dividends when they become more mature and they don't have avenues of where they plan to reinvest that money for growth. Well, that's a sort of negative overall. If they don't still have avenues for investing their money to continue to grow the company, well, if their best investment is just giving the cash away, you have to rethink about what you're invested in. But that emotional side of things is super important because myself included, I find that my timing for maybe selling something, whether I justify I'm using it as a dividend or whatever it is, tends to correlate with when a stock is correcting to the downside. And that's really when you should be buying a company and vice versa for the upside. If you're super good at the trading, and you're able to siphon off a few shares when a stock is going higher in order to take what you would want as a dividend, that's great. And then the tax ramification of being able to not sell it so that you don't owe taxes is a value as well. But with the dividend paying companies, since they automatically do it for you and they send out a check, it takes all of that out of your concern. You don't have to worry about where the stock is priced or anything else outside of feeling that you're invested in really good companies. And you'll receive your check, you'll be able to use it however you'd like, and you move on. The other thing is companies that tend to pay dividends are often a little bit more stable in terms of what types of companies they are because as said they've grown, they're now paying a dividend because they don't have things that they want to invest in. Well, generally they're going to be less volatile. They're going to be things that have been around a while, and they're probably pretty good position to be able to make those dividend payments. Whereas timing the market to sell off a small percentage of the portfolio because you want dividends may not work so great, but it might depending on your ability. And then to my love of the gloom and doomers out there, I almost find it comical how the videos after the Fed cut continue to say how they knew it, the economy's terrible, look at me, you know, everything is collapsing as the markets are making new highs. It's odd to me how they've pat themselves on the back. They talk about how the Fed knows something because the economy is just in such terrible shambles, and markets continue to chug along. Um, I don't know if they do it to try to grow video, subscribers and get people to watch their videos. If it's what they really believe, I do still find them entertaining. I watch them for the entertainment value, as well as I like the data points and I try to stay in tune with what's going on. The problem for me is they stay so negative and they get people in the comments so worked up about the government's terrible, my this, my that, everything's awful, that I think they stick people in a rut of not investing. And even if we have a recession and we have a correction, even if the markets fall, I would rather see people getting in the habit of saving and putting money away and trying to grow a portfolio than waiting for some big correction. Because my guess is if you're always waiting, even if that correction comes, you're probably not putting money in. You're probably just watching it. And if you want to pat yourself in the back and say you knew it would happen, well, great. And if you're wrong and the economy just keeps going, you're still going to say stay never invested. I'd rather change the rhetoric and encourage people to save some money and put away for their future, no matter if the markets go up or down. The trouble is, if they go down and you've lost your job, it can be very scary, and nobody wants to be going through that. However, the habit of trying to save is what I would push. I know I've talked about. I read well, read. I really love these. I don't know if you guys use them, the audio books, and YouTube has a lot of them because some people just read the books to YouTube and then post it. But I listen to Rich Dad Poor Dad, and I'm not going to live by it, but I think he gives some really good tidbits, some of which are, you know, things about saving and understanding what an asset is versus a liability. And I don't think it matters whether an economy is going up or down. Creating those habits of putting money away is a good habit, and not trying to time it so well is probably important. And the negative videos are just encouraging people to complain and not put themselves in a better position. If I had a goal for the channel, well, one is, you guys, I've said it before, you guys are helping me. By me doing the videos, it's a reminder to try to stay disciplined and stick to the things I really believe in, because I feel like I have pretty good insight. Forgive me, for sounding like I have a huge ego. I really don't. But I tend to have pretty good insight, and I'm my worst enemy. I generally screw up my own trades. And I've done a much better job about sticking to it and have had an exceptionally good couple of years sticking with the trades that I saw, and being good about it. Now, I've had my losers. You guys know, like, I'm still in Boeing, which, I'm taking some heat on, but I still believe in it. And I did terribly with Snowflake. But really, if you look at all my past videos, I've done really well on an awful lot of things, and I've stuck with all of them because when I do them in the video, I feel obligated to be a little bit more disciplined about my trades instead of making rash decisions. So I thank you guys for that. But my goal, which is what I was trying to get to as I rambled on for a little while, is to hope to get people to start paying attention and saving for the future. It's not as easy as it sounds, but I promise that if you do, there's nothing better than feeling comfortable that no matter what happens in the world tomorrow, I'm okay for a little while. And the earlier you start, the longer time frame you give yourself for that. And if you're not the youngest person, if you're like me, I encourage you to teach this to your kids and talk about it. Open up an account with them, put $100 in it or whatever you can afford, and just get them to pay attention to the stock markets and other things. And then it doesn't have to be stocks, by all means. I say it all the time. And same in the book. It's like any asset. If you like baseball cards, just know the market. Know whatever it is you invest in and know it better than other people. I'm sure that wine is a collectible. Obviously, artwork is. The thing is try to make sure that you invest in the best of the best, because what I find with all things, if you stick with what the best thing is, you do better than picking that thing that you think is going to do better in the long run. Like, if I look at the baseball cards or sports cards, because it's something that I paid attention to growing up, at least for myself, you're better off just investing in Michael Jordan and not worrying about, I used to really like Dave Winfield when I was a kid. As much as I liked him, best of the best is what everybody wants, and Michael Jordan is internationally known. I tend to stay away from the new players because I don't understand that market. They've printed too many cards, and there's too many one of ones and this special gold foil, whatever the heck it is, that I'm just not interested in learning it. It's too much for me to know. But if I stick to like the 80s and 70s and 90s and just the top players, well, they tend to do okay, and the market tends to go up over time. Now, just like the stock market, it had a huge boom and bust a few years back during COVID, but I'm guessing going forward, that's washed itself out and probably normalizes, and you'll see things drift the direction they go. Now, I know I promised I would talk about a few stocks that I still think are undervalued, even in this market that's making new highs. So, one of them, I think, is Google, with the Department of Justice talking about splitting them up, which, who knows, this will take a few years to work itself out. But Maybe they do, maybe they don't. In the meantime, that fear and that nervousness it's putting on the stock has put a weight on it. And I think it creates a great opportunity to purchase it at a discounted price. You may have to wait out a long time, but Google's a great company. I mean, my God, where do you think YouTube is going anywhere or going to have any problems? Even if AI comes around and other search engines start to compete with them, and to be perfectly fair, I'm guessing they have some pretty good engineers working on their AI system as well. Well, I still think they have some ancillary products that are pretty powerful, and if the Department of Justice splits them up, probably actually gives more shareholder value in the short run than by being a big conglomerate. I guess we'll see. I don't know how it'll play out. Some of it seems a little bit late in the cycle, and by allowing Google to be as big as they are, as well as Amazon, some of the others, it allows them to spend money and try to grow other avenues of the business to compete in new areas because they have so much free cash flow to be able to use to invest in things. I don't know if they should be split up or not. My general thought is it's probably a net good to the public. I don't think we're paying more at this point because companies are getting bigger. You know, the original idea of monopolies was when the oil companies, I think it was primarily Standard Oil, was owning up all of the gas stations and charging too much and taking advantage. I don't really see Amazon as doing that. My guess is we're actually getting better prices as they grow in size because of the ability to discount better. But that's just my opinion, and I'm not the guy in charge of this stuff. But with Google in particular, I think it's creating a really good opportunity. Quite honestly, I think anything under $180 a share is a pretty reasonable price for the company, and I think it closed on Friday somewhere between 160 and $165 a share. It's not like half price or any super discount, but I do think it's really fairly priced for a great company. Another one that I still love is Meta, which has had a great run and is making new highs, but price to earning ratios based on their profits is still really reasonable. And I think they're growing at an exceptionally fast rate. And people seem to love to hate Mark Zuckerberg. I haven't really seen a period where I thought Meta was just overpriced based on their earnings. Now, it feels like it's run so far. How could it go higher? Maybe it can't, but maybe it just continues to grow those earnings. They're spread into a lot of different places. They even have things that are huge that they haven't even figured out how to monetize yet. So if and when they do, I think that's avenues that they can really still push that, increase those earnings, and continue to grow the company. Now, keep in mind, Meta is my largest position, so I hate to talk my positions. Um, but I think it's a great company with so many facets that people don't even think about. And I know I've mentioned a while ago, but I haven't talked about it recently. One of the things I love about Meta is what the street hates about it. So the street hated that they were spending so much money on AI and putting money into things that to them didn't make sense. And that was what drove the stock a while back down below $100 a share because they saw that spend and thought they were being wasteful at a time they should be more careful. What I love about that is they could just turn into a dividend stock with little growth and not do much. But what I see is Mark Zuckerberg still has this desire to try to grow and expand and continue. And I think that's super cool because I'm investing a guy who doesn't want to just roll over and accept that it's a cash cow and send that out to his shareholders. He still wants to build new things, and I envision the Oculus, like, I could be completely wrong, but I think what he's pushing for is a world of selling tickets to a football game where you can be at home, but you can choose, front row 50-yard seats to nosebleeds using the Oculus and different prices for that at a much more affordable price than going to the game. And in some ways, it may be way cooler because you'll be able to see more. On top of that, like, I think what you'll see is little advertisements pop up on these things during the game. While you're sitting at the 50-yard line in your lounge chair at your own house, at the first quarter, there'll be a little advertisement for Domino's or wings or whatever it is that they'll have delivered to your house by halftime. I think it's a great idea. I don't know if that's what they see out of it. My son has one. I've played on it a little bit. I get dizzy, so it's hard for me. But meanwhile, I went in the water and scuba dived, which I can't really do in real life because I get claustrophobic. But it's super cool. And I went to the African safari and got to see the animals. And I thought it was great. And I picture kids being able to go to school on those things one day, where instead of going in where they have fears of school shootings and not being safe and whatever else, that they put on their Oculus and their desk at home. They're able to see their teacher. They can click a button to raise their hand and ask questions, and then you save all that travel time as well. I mean, same with the games. Imagine being able to go to the game at home and sit down at 11:59 because it starts at 12 instead of leaving the house at 10 o'clock because you have to get there at least a half hour to an hour early because the traffic gets so bad. And maybe you tailgate, but half the reason you tailgate is if you cut it too close, you're going to end up late to the game. There are just a lot of advantages. I hope that Meta is able to partake in these things, and I hope that the world really does continue to grow and it's super cool. But I love Meta. Now, UPS has finally creeped out of the range. I find when that happens, again, this is not advice, this is just what I find, it'll break out of the range to start to go higher. Then I think there's pretty good chance it could retest what the old range. And sometimes it even pokes into it. So what I saw was UPS was trading, this is approximate, I'm not looking at a chart, between 125 up to about $131 a share. It closed on Friday at like I think $135, which doesn't sound all that exciting, but to me it really is because it's breached the top end of that range and it seems to be going higher. A lot of times it'll retest and get back below 130. I wouldn't be surprised to see it drop to 128, possibly even 127, and then start going higher again. That's what I would love to see. Now, sometimes it just goes. So if it's a company you want to own, it's still paying approximately a 5% dividend. And I think UPS is a good company. They sold off when FedEx had the bad earnings, but they are different companies. I know they're in the same space. And the opposite happened when UPS had rough earnings. FedEx kind of sold off before going higher. Now, FedEx obviously had a big correction. Again, separate companies. UPS is really good in their space. They've done a lot of layoffs. They've done some other things to mitigate their expenses. And the fact that after they sold off from the FedEx news to then break to the upside outside of their range is a really good technical sign. Don't know that it'll continue. It's a position that I have. I put on an okay size position, and I'm really comfortable with it. It's a company I want to own for a while. And another one that I'm sticking with is Lululemon. They finally corrected to a price that I think they're really fairly valued in terms of their price to earning ratio. For a long time, since they were growing at a super fast pace, they were extremely expensive, in my humble opinion. So it was just something I kept an eye on. I hadn't really watched it for a long time. I noticed recently it had fallen in half. And then I started paying attention. It looked like it was really reasonably priced for its growth expectations. Now, companies like that can stay undervalued for a long time while they figure out what their longer term growth really is. It went from a company that was expanding at a fast pace because they were getting super popular to a more mature space. So sometimes that takes a little while to work itself out and figure out what the value should be. Oh, sorry about that. Had to hit pause for a second. And I got a bug in my eye at one of the other ones when I had to stop. Anyway, Lulu's finally gotten to a PE ratio that to me looks totally reasonable for how they're growing. I felt the same way about Ulta. The only reason I kind of covered was when Warren Buffett was buying it. I thought it pushed it too far. Obviously, I'm wrong because it seems to be continuing. I think it's pretty reasonably priced as well. I just worry about some of the stuff I've seen about their competition and whatever else. And I also worry because I liked the company when Barry Diller was the CEO and she's moved to Foot Locker, although she's really struggled there. That I'm not sure how it continues, which goes back to one of my comments about Chipotle. If I if I said it in the video, in their stock split. Nichols has now moved on to Starbucks, which I love, and they've announced a stock split. It makes me wonder what their future is going to have. Anyway, those are all totally off topic. We're talking about Lululemon, and I need to stay focused. So I think Lululemon at its price to earnings ratio is super reasonable for its growth rate. Had a really good week this week. It's still kind of in a range. It seems like it's poking through to the upside, which is awesome to see. Hopefully, it continues and just goes higher from there. And since it's one of the ones that have been struggling, let's continue to talk about Boeing. They are going through some struggles. They have this strike going on. But I think when that finally works itself out, the bad news should be finished. I don't know. I've been wrong on it for what, 3, 4, 5 months. Maybe it just continues to be wrong. Just so hard for me to picture a company like Boeing getting into so much trouble that it pushes them out of business. And at this point, the negative sentiment is just so strong. I don't know what it would take outside of another crash or issue that actually gets pointed to them that could actually bring in new sellers and push the market lower. When this all subsides and the sellers are done and the negative sentiment is finished and they're not talking about it in the news, generally what happens is you're left to a normal market where the buyers are still in because it's people who are buying it based on value. And as the sellers subside, it just ends up going higher. I don't know how to explain it. And again, you need to do your own research. But the buyers will do their best job to buy it at the cheapest price they can. But if there's no more sellers putting that weight on the stock, it's going to have an opportunity to go higher. And that'll be when the news is no longer talking about it and nobody's paying attention. It's going to be when it's just, you know, not in anybody's radar. And then by the time it's back on the radar is when something good comes out, like the new CEO and the earnings and whatever else saying, or they get some new contract that how great Boeing is. And hopefully by then it's significantly higher. As it's not in the news, well, I'm hoping that that's the time it starts going up. What I really hope to see is the strike finish. It has one more bad day of, oh, it's terrible, everybody's, but they've come to some agreement, and then it start to reverse. And then I'll ask you guys for your advice on this one. I'm not sure what to do with Tesla. I was fortunate enough to pick it up when it fell down to like $140 a share. I thought it was finally enough negative news on it, which is what I was talking about. And it seemed like the press was settling down with Elon Musk's compensation package and whatever else was going on. But now that the stock is gone, it closed on Friday at $260 a share. Is it something that one should just take the money and run? Or is this something to own for the long term because maybe they could become, a huge competitor in this space? I think they are already. But do they really take on other avenues? I like that there's so many things I like about Tesla. I like the subscription model. I like the cars. Like, they don't make the best car. I will tell you, driving a Mercedes for a little while and a BMW, they're so much better put together in terms of how solid they are, how good the lines are. There aren't like gaps here or there. Like, Tesla's car is not gorgeous like those, but in terms of ease of use and just simplicity, my God, like, it's awesome. I haven't been to a gas station in over 10 years. I haven't had to get an oil change and sit and wait for my car. I just had a new repair done, but it was a recall. I guess the screen was having a little bit of trouble. But since 2014 till today, so 10 years, I think in total, we spent less than $300 in repairs outside of tires and windshield wipers. We've had to bring it in now. This is the fourth time total. Twice has been recalls. Both were for the screen. But this is over a 10-year period. And again, I come home and I plug it in. Like, it's so easy, and it saves so much time and energy. I really like the cars. Are there ones that I think are like nicer cars? Well, sure, but they have bigger headaches with them as well. That being said, is it a good investment here? Do you stick with the position, or do you simply say thank you and move on to the next? Because that's exceptionally good return in a rather short amount of time and at a price now that I don't think it's the steal that I did before. You guys tell me what you guys think. What are your opinions on Tesla? I'm curious. Anyway, thanks for watching. I'll say again, do me a favor if you haven't already, hit that subscribe button, smash the like button, give some comments. That really helps the channel. I'm super excited to see that we're like not that far away from maybe even 50,000 subscribers, which is beyond cool. Like, again, I kind of do this for myself. It helps me to feel disciplined. It's fun. It gives me something to do when work is slow, but it's cool. And if you guys could help, the only support I ask is hitting those buttons, and it's free. It doesn't take much, but it really does help me on my end. And maybe one day I'll be able to use this and go retire to some other country. Oh, real quick, I do this each time before I go because that reminds me of one other thing. There's so many videos, even myself included, who thinks about retiring and moving out of the country. If I didn't have a 13-year-old son that was, has good friends and is well developed and likes his schools, I really would consider it. I'd even consider online schooling. But when I watch these videos about living abroad on $2,000 a month and how you live like a king, the one thing I would really be cautious of is currencies are not stagnant. Even though it's $2,000 a month currently, that can change. And it can change rather dramatically, and it can happen not so slowly. So if all of a sudden the US dollar weakens, which I see as a legitimate possibility as we continue to spend and other countries start to look towards other assets as potentially being able to used on the international market, whether that means gold or potentially Bitcoin, which maybe not, but whatever, or their own currencies, as the US dollar becomes less used, it really could cause it to weaken. If you're moving to Thailand or Malaysia expecting to be able to live on 2000 a month, nothing can change in their economy other than the currency risk, where all of a sudden your expenses could potentially double because you're getting half the money in their currency. So be really cautious. Make sure you have a lot of wiggle room if this is something you want to consider, because those things are something that I don't think almost any of them take into consideration. I used to trade currencies, so it's something I really pay attention to. And the more the videos that I see, the more likely I think it's going to happen. Because on an international scale, if you make your currency too strong where your citizens are just buying up property and moving to different areas, eventually that's going to impact their economy, where either their currency has to get stronger or they're going to have huge inflation themselves because of all those new people moving in that see it as so inexpensive. So when I see all those videos, as much as I think it's great, I do worry that some of the people moving there aren't going to factor in the currency risk and may find themselves in a position in 4 or 5 years where they didn't plan accordingly that, whoa, the dollar may not go quite as far as it used to. Now, that was a long caveat as I was getting to the end of do me a favor, like, subscribe, make your comments. But really, for those of us who fantasize about moving to another country and may really take up on it, try to factor in the currency risk as well, because it could be something that somebody forgets when they're doing their analysis of moving somewhere. Now, if you do, tell me about it, because I think it's super cool. I really like Malaysia. I like a lot of the Southeast Asian countries. I worry about the weather because it's super humid. As hot as it is here in Vegas, it's totally different there. Anyway, have a great week. I'll try to do more shorts. This week was kind of a boring week, even though the markets were drifting higher. I didn't see a whole lot to talk about. Have a great day. Talk to you again.